principles, five foundations, I would say, or philosophical foundational keys. What is an investment firm, or what do I think about and our team think about in good times and bad? Because investing is a perpetual event. It is not just, hey, let's invest today. It is forever. There's really no end to it. And however, the environment and the climate that we're investing in changes dramatically. So we have some really good times and we have some really bad times. We go through scary events in the economy and the world, and that happens all the time. But we also go through periods of time where things are going really well, and that even creates some fear. Well, the market's doing really well now. I don't know if I want to put money in the market at a high. So there's always a challenge. In good times, there's challenges. In bad times, there's challenges. So what are some kind of North Star ways to, I think, principles, and there's 5 of them, to always be thinking about, and this is what I think about. And again, I start by saying there's always these questions. What are the questions now? Where are interest rates going? Well, we know that the Fed has been getting pressure to lower rates. So it sounds like short-term rates are going to go lower. What does that mean? Well, also that it may actually mean that longer-term rates go up and mortgage rates don't come down. So there's a lot of uncertainty around that. Valuations, the S&P 500 has had a good 2025 after a big rebound after the April sell-off, a big May and June rebound. Well, valuations are stretched. It's trading at 22 times. That's above historical valuations. And it's very concentrated in the top 10 companies, which are giant mega cap, $1 trillion companies. And we're looking at 38 to 39% of the entire S&P 500 is concentrated in just 10 companies. So that's a question. Well, there's high concentration. So those are all the things that, let's say, we're worried about today. And there'll be a new set of things to worry about tomorrow. And there'll always be a set. So the first kind of guiding light to me is participation over perfection. We need to participate as investors for as long as we can and not get thrown off track. So how do we do that? One, there's got to be a dose of rational optimism all the time. The most rewarded investors over history haven't been blindly optimistic. They haven't been greedily optimistic. They've been, I would say, rationally optimistic, which is believing that we're going to have things will over time continue to evolve and get better. The economy expands, we're more productive, we produce more, companies do more, earn more. And to some extent, we've got to look at the overarching environment for that. And that's why what drives my rational optimism as an investor is just I believe in the army of American productivity. It's 165 million people that either have to work, are okay to work, or love to work. Either way, you're working in America and you're trying to do a little bit better at your job every day. Some people a lot better. Put that together and you got companies that are just continuing to methodically do better, more, faster, quicker, more efficiently. And that to me gives me a long-term sense of rational optimism. Secondly, what does that translate to? It translates to owning stocks. It translates into being an owner of assets, meaning mostly equities. That's where we're going to get our inflation protection. That could also be in real estate. These are assets that should inflate along with inflation over time. That's what they're designed to do. Now, there can be great volatility there, and it's not easy to be a stock investor, but that is what will win the day over long periods of time. In order to do that, number 3 is to have safety assets. I call them dry powder, because that dry powder not only keeps you having a portion of your assets in stable places that don't necessarily go down or limited downside. These would be high quality bonds and money markets, et cetera. It's more than just that. To me, it gives you an overall force field of being a better stock investor. So the safety assets allow more people that have less of a stomach for volatility to have exposure to equities. I think it can make us better, more participation in equities, which tend to really be where our gains come over Time. The fourth, I can't overstate diversification. As much as we talk about it, it almost seems like kindergarten, 101, basics of investing, of course. But I still see over and over again examples of people that are overly concentrated in one area, one legacy stock that they never thought would go down. One legacy sector. That's the only sector that's it's doing well. It's doing well. It's doing well. It's always going to do well. Nothing lasts forever in this market. No trend lasts forever, except, in my opinion, the overall expansion of America and the Army of American Productivity. But I still always, as a reminder, that diversification is so key to maintaining your assets over time. And then fifth is really about time and patience and behavior. And that's kind of what holds all these five cores together. All these there's math to this and there's science to this, but there's also the human emotion side to being a good investor and being a rational planner over time. Put all those five things together, and that's what I think about over and over again as an investor. If you go back to the year 2000, 25 years ago, had some really great markets and some horrible markets, and multiple bear markets since 2000 to today. S&P 500 is, with dividends reinvested, up over 600%.
Wow.